Hey, it's Paul Moore and Matt Faircloth here, and we are finalizing our setup, so please be patient. Yes, we are. So yeah, here it comes. There it goes. Man, do I look that old? I don't look that old.
No, you don't. The camera
right.
adds 10 years.
Yes, right.
The camera adds 10 years, Paul.
All right, so we're here at Michael Blank's conference here in Dallas, Fort Worth, and my good friend Matt Faircloth is here.
Yeah.
And he's looking good. I'm not
You're
sure
looking
about
good
me.
too. You're looking good.
No, I don't know.
You too.
Yeah,
you're a
you.
good-looking guy.
Thanks.
Yeah,
Well,
you
that's
silver
great.
fox over there. Hey.
All right.
So we want to talk to you guys, just live Q&A. This isn't an agenda-based thing. Paul and I are here at this awesome conference. I'm going to be going live later at 5:15 Central with Michael Blank doing a apartment building Q&A. But we wanted to talk to you guys now about just really like can ask us anything. Just spending a few minutes with the audience here. Hi, Olger, Marilyn, hola, how are you? And I've got somebody helping us off camera here who's going to be watching the Facebook feed. We'll watch all you folks here on YouTube ourselves. And I've got a good friend over here who's going to watch you guys on Facebook. So just type in your questions.
Yeah, shout out to Nick Cucci.
Pick our brains. Yeah.
All right, so
I'm glad to see you too, Olger.
Hey, let us know if you can hear us. Can you hear us? I figure you probably can.
I think so.
You think they can hear us?
I don't know.
All right. What we need you to do is if you would just be kind enough to give us a thumbs up, a share, a like, a smiley face, something to let us know that you're out there and that you're with us. Okay, you can hear us. Thank you so much. All right. Great. So let's get started. Who has a question for my good friend?
Before we get to the questions,
yeah,
what's the biggest takeaway you've gotten from this conference? Because we're at an awesome multifamily conference being here, right?
Yeah.
I've had some great conferences. What's something that's come up for you from being here?
So I was amazed. A lot of people know Neil Bawa. Neil,
he's the man. He's
the
real estate mad scientist.
Yeah, I tell you, he is. And on Thursday, we were at Michael Blank's Inner Circle event. And if you guys haven't heard about Michael Blank and his Inner Circle, check it out. It's a mastermind of masterminds of multifamily gurus. But Neil was there, and we had a lot of other great people there as well. And they shared some amazing information about marketing and reaching your audience, and I mean he was talking about scraping and all this type of stuff, and man, it was just incredible. And you know what? I also felt a little bit free. I do a lot of blogging, as you do on BiggerPockets.
Yeah.
They were talking there about how people like video more, and it's much faster.
Yes.
And we've got a video producer right here, Nick. And so, man, that was kind of freeing for me to know, I don't have to spend 5 or 10 hours writing a blog post every week.
No, I think that video is easy to consume in a lot of ways. Not that you guys should be doing this, but you could be watching this right now in your car. You should be watching it. You could just plug it into your car audio and listen to it, right? But video can be consumed in a couple of different ways.
Right.
When you read something, you can only read it, right? But in video, you can watch it. You can kind of have it going on in the background. Who does that, right?
Yeah.
People do that. You maybe minimize the video. They could be listening to us right now while they're checking their email or whatever, waiting for you and I to say something profound, or they could be just absorbing every word you and I are saying about watching right now, or as I said, they could be just watching on their phone, and they can preserve it and pause it and watch later and things like that. And it can also be easily shared and everything like that, which is why I think video is a phenomenal medium. And I enjoyed Neil Bawa's talk as well.
What about you?
So they had Robert Helms, right? Who was one of the real estate radio guys. He was just on the BiggerPockets podcast recently. Robert Helms blew my mind with something because I've looked at multifamily. We buy multifamily. We've also bought other types of asset classes and things like that, single family homes and other types of stuff. And Robert blew my mind in that the building itself is not the asset, right?
Yeah.
It's not, right? He made the face that I made.
I missed that.
The building's not the asset.
Why isn't the building the asset?
The building is not the asset because the building is not what puts money in your pocket. What puts revenue in your pocket is the asset, right? The asset is the tenant.
The asset is a tenant.
The asset is the tenant.
Stream.
Yes, that's what the property is an income stream, and that was like what?
Yeah.
Oh my
so
goodness.
in residential,
the
building is valued as a building. That's why they're valued on comps.
Right.
But in commercial real estate, it's a value formula, which is net operating income divided by cap rate. And that is the value of the asset.
Well, if you look at an apartment building, what do you have? You've got a certain amount of doors that are all occupied by residents who just basis the world that we live in, they're going to be paying about 30% of their earned income for their cost of living for where they live, right? So for whatever they earn in the U.S., whatever gainful employment they have, they're going to send you 30% of their earned income for the right to live in that door that you provide them, right? I know you're a self-storage guy, right? So among other things, multifamily as well. You've got several different asset classes, but as in self-storage, that unit, that box that you're giving them, which is pretty much 4 walls and a roof and security, right, is that tenant that's putting their stuff in there is the asset, because what it is an income stream. It's not the sticks and bricks. It's not the walls and things like that. And this, partly it's because Robert Helms and those guys are, somewhat, not Chicken Little or whatever, but the world may be changing a bit and things like that in the global economy and stuff. And if it does, that's okay. If the dollar continues to devalue, my tenants will still have gainful employment somewhere or be able to locate it, and even if they're paid in, gallons of milk or ears of corn or whatever it is, they still have to compensate us for where they live, as part of the law,
Absolutely.
right? Or pay for where they're keeping their stuff, right?
Yeah.
So it's the revenue stream in whatever currency that's the current currency is the asset. That blew my mind.
That's good.
Yeah,
good
man.
stuff.
Yeah.
All right. So Nick, do we have any questions?
I'm not seeing it come up there.
On Facebook. Yeah, that's okay. Well, we got YouTube's blowing up here. So
okay. All right. So we're going to look for a few questions. So if you have questions, if you're a newbie or if you're not a newbie and you're looking to go to the next level, let's talk. So we have a few more minutes here for questions.
Well, I've got
we might lose Matt in a while.
Senzo. I try to get money to buy a 5-unit building, right? So what I would suggest, Senzo, and this goes to anybody else watching, if you're first time real estate investing, new to the real estate investing world, what I would suggest is that if you are renting, your first real estate purchase should be your primary home, right? Mm-hmm. And it doesn't mean that you should go buy a 3-bedroom, 1-bath and put your whole family into it. If you want to, buy if you're willing to compromise with yourself and not have the 3 acres and a yard and everything like that, buy a 2, 3, or 4 unit property, live in one unit and rent the other ones out. Yeah. And so Senzo, I would say pull that back just one from 5 units down to 4. Buy yourself a 4-family, live in one unit and rent the other ones.
Right. Yeah, that's true.
Cool.
Good stuff.
Yeah,
so that is a great way to get started. I've talked a lot about on these Saturday events, house hacking. We've talked about the Airbnb version of house hacking. We've also talked about lease option sandwiches, rent to own. So you can go back and check out some of those. So, Nick, what do you got for a question?
How did you guys get over capital raising for the first time?
If you don't know, this is an epic author of a capital raising book. How could I even say a word in your presence?
Well, okay. That's an interesting question. Thank you, Nick, for that
The question was, how do we get over the hurdle of raising capital for the first time?
Yeah. So how do you get over the hurdle of raising capital, right? I think that you've got to understand something, right? When you're asking people for capital for your deal, understand that you're not asking them for a favor. You're not asking them to help you out.
Right.
You're not asking them to, hey, can you take a shot on me? Whatever. They need you.
Right.
They need you. Given this current state of, like the roulette wheel of Wall Street and what's going to happen next and things like that, and just simple desire to diversify their wealth and everything like that, where else could they put their money aside from in mutual? And not that stocks and mutual funds are necessarily bad, but they need to diversify, at least try out something else. Be in another vehicle too, alongside real estate. That's why you've got to realize is that they're not going to be like, oh, you want to sell me something, whatever. It's all up here in your head, And once you start talking to these folks, you realize, what, they actually need to diversify themselves. And if you approach them with that level of confidence, I think you'll find a very, very different reaction from them than going to them down on bended knee and saying like, oh, can you please, invest in my property? Please, please, please take a risk. It's not like that. So
There are like 3,000 signals that we give off from our look on our face, that
Interesting.
show what's in our heart of hearts. So if you can come to believe that you've got a platter filled with gold bars, you're offering them, and you really believe that when you ask for capital, then you will come off differently than if you believe that you're begging them. So I think that's what Matt said.
It is. We've got a few good questions here. I'll fire them off. What's the best advice for developing raw land in opportunity areas? Yeah, it's interesting. The opportunity zone thing has become a big conversation.
Yeah,
a lot of
right.
people are talking about it. So,
Yeah.
what are your thoughts on develop? I mean, again, I've developed some raw land.
Right.
Actually, it might have been in an opportunity zone, but we didn't play that card.
Right.
But how about yourself? Any thoughts on
So
that?
opportunity zones are what's been called the best tax savings opportunity in the history of the U.S. tax code in 106 years. So if that's true, it's something we should all be looking at. There are opportunity zones in places like Sun Valley, Idaho, where the wealthy gather, and there's L.A. and Sacramento. So you might be in an opportunity zone. You can get a map and you can pull up online and see if your address is in an opportunity zone. You might probably realize that you have to more than double the value of the real estate. So if you're developing raw land, it's pretty easy to more than double the value. There are some other nuances with that. Opportunity zones give you the chance to basically avoid, for your investors and yourself, avoid capital gains taxes in 3 major different ways. And you can Google this and find out more. The window's closing on this though, Matt, and people need to do it this year or next year if possible to maximize their benefits from this. I still haven't answered the question.
You're laying down the magic though. Keep
I would
going.
say figure out if it is a good
over here learning from
location
you.
for
Go ahead.
self-storage, and you can do that with a website called Radius Plus. That's where you can figure out if it's a good location for self-storage. There's all kinds of demographic information on there. You can also figure out if it's a good location for maybe a medical office. Being a medical office building owner is a great way to make money. There's also, you can do regular office. You can put a business in an opportunity zone.
Sure.
A business, and actually the business.
As long as
can
you're making
avoid
major
capital
investments
gains.
into the property, right?
As long as you're doubling the value of the property.
What I would say to Miss K, who asked about opportunity zones, is that there is a lot of nuances to opportunity zones, and I would do my best if you're looking to work in opportunity zones is find someone who I wouldn't say the word expert because this just has been around for long enough for anybody to profess themselves as an expert.
Right.
But I would work with someone who has some sort of a background either in development or in working through tax situations and things like that. So definitely have a good CPA. And there's a lot of people online that are actively working in opportunity zones. So I wouldn't try and air quote figure it out on your own. Because there's just too much going on around that.
Right.
So
Agreed.
that would be my question. So
All right.
few more. What do you think about living in a subject to house? Miss Bobo, I have no idea about, so I've never done subject to. Subject to makes me nervous because what a subject to is you're buying a property subject to the prior mortgage from the prior owner. What do you think about subject to?
I think it's okay. I've done a lot, and that's the basis for a lease option sandwich.
Yeah.
And
what do you think about living in a subject to?
I hadn't really thought of it before.
I
It's a
thought of
great
it.
question. I think if you can get control of the mortgage payment, and if you can put it in a land trust to help you be sure that you're not going to lose it, which would be basically the potential trigger of the due on sale clause, which, by the way, I've never seen happen, although it's talked about often. I think it could be okay as long as you give yourself maybe a 5% chance you could lose the house.
Yeah. Right, the bank could show up. I've yet to. Have you ever heard anybody losing a property because the due on sale clause was subject to?
Not once.
A lot of people talk about. Well,
Right.
this could happen,
Right.
right? I hear a lot of people talk about it. And I happen to know that it is something that can happen, but I've never heard of it happening. And
No.
again, that should never be a reason why you should
Right.
think that it's not going to happen. It's just because
Right.
it hasn't. It could, but at the end of the day, it hasn't happened. Blaro, what are about loans on multi-unit investments? They're just really commercial loans in general, or business loans. It can only get banks to go like 3 to 5 years out. what am I? You're not missing anything, Blaro. That's just how it is. You know, I mean, just for larger properties, for anything above 4 units, the mortgage is only going to be locked for 3 to 5 years. I would say you could go 5, or you could go 7, maybe 7, or maybe even 10 if you're willing to pay a little more in interest, right?
Right. Yeah. Michael Blanc talks about a group called Sable, Sabal, that does small balance Freddie Mac loans. You might want to check in with them.
Yeah. Right. Yeah, you can do longer term stuff. But the bottom line is, Blaro, you're not going to get 30-year fixed anymore. Once you get into the commercial world, it's just one of those costs of doing business in larger real estate. I'm not happy with it. But unless you get a HUD mortgage, which is extremely difficult to manage and should not be something you should pursue, because a HUD mortgage can be locked for 30 to 40 years.
30
but
to 40.
I've talked to very, very seasoned investors that have deep teams and a lot of people that work for them, and they still tell me these things are big pains in the butt. So I would just expect for the foreseeable future, Blaro, that you're going to be dealing with mortgage rates that are locked, rates to be locked for 5 years, and then they reset after that.
Right. So Thrifts and Dreams says, I have a great idea for a business to be run in an opportunity zone. I have a building available. Problem, it has asbestos and mold. It's a pretty large building. Any tips?
Well, I would say, Thrifts, that at the end of the day, look, one of the benefits of the QOZ program, so you know a lot of it. I know a little. I know like this much. Paul knows this much. I know this much about the QOZ stuff. One of the incentives is that you need to invest. You probably know the percentage, but a certain amount of the money that you put into a QOZ property has to get put in there in renovation.
Right.
Right?
That's right.
Do you know the percentage?
I don't know the percentage, but I would check out.
I propped you up there.
I know.
Yeah, that's okay.
Well, I mean, I think it has to be. You have to double the value. Is all I've heard.
Yes, and a lot of it's in reno that you do, and so part of that work that you do to the property. Bottom line, Thrifts, is that a lot of the part of the investment needs to be in work to the property, and so that could be in remediating mold and remediating asbestos and just about anything. I mean, I can't think of many things in a property aside from its location that can't be fixed with money.
Yeah, I agree.
Mold can be fixed with money. Asbestos can be fixed with money. Lead-based paint can be fixed with money. All these bad things in a property, even structural damage, all that can be fixed. One thing you can't do is pick it up and move it just yet, right?
Yeah, not yet.
No, and we can figure that out too eventually. They do that over. I've heard of physically. Yeah, but anyway, let's not go there.
So Thrifts, real quick. One thing, make sure you get all other quotes on mold. I have a friend who got a mold quote of like $45,000. He was able to do himself for like 10. So that's a big racket. Another thing I would consider is check and see if your state allows PACE funding, PACE. It's something to do with energy, making an old building energy efficient. For example, Ohio is available for PACE funding. Wisconsin, Illinois. I think there are certain states though that are not set up for PACE funding. It's an amazing way to get debt financing in place of equity that will actually allow you to repay it at sort of like a bond, and it allows you to repay the debt through your property tax payments, and it actually doubles the investor's equity in many cases. It doubles their return, I should say. And if we had time, I could give you details. But I know a guy who's done 3 deals with PACE funding.
That's a Jersey thing, right? Yeah, my friend. I know a guy, right?
I know a guy.
Okay, a few
400 to 500 for repairs, he says.
Well, but at the end of the day, Thrifts, that just may be. You said it's a large property as well, so that might be what you have to do, and you might have to raise money. Look into my book, Raising Private Capital. Let me tell you how to do it. But also, understand it's an opportunity zone, and so there may be an opportunity to do heavy investment. I do the internet high five, and I'm going to offer one to Mr. Hansen there, who's got an awesome interest rate on an awesome FHA loan product on a 4-family. Here you go, Hansen. Here's your high five. Bah!
Bam.
Congrats, man! Awesome deal.
Good job.
Cool.
Yeah, you want it.
Oh, thank you.
All right. What else we got here? So who else has a question? The Tartesso says, I have 4 duplexes on mortgages and cash flow. And my question is, should I pause and pay them off or continue to invest with the cash flow? I'm torn. Should I pause and pay them off?
What market are you in, the Tartesso?
Yeah, good question.
I got to know what market you're in. If you're in a rising market, then I would say keep the train a-moving. Yeah. If you're in a market, if you're in like, San Francisco, I might say you might want to hold off for a little bit. High five you back. High five, Hansen. You got this. Now go find the next one, Hansen.
Yeah. While we're waiting on the Tartesso's answer, for anybody out there, if you're in a market like Las Vegas,
Yep.
Florida, California, where sometimes they
Maybe
double in a
Dallas.
hot market.
Maybe Dallas.
Well, I'm not thinking of Dallas,
maybe
but
Dallas.
I'm thinking about those places that double in a hot market and
Right.
they drop to 40% of the value in a bad market.
Yeah.
That's where you might get in trouble with that. Rod Cleef is a famous example. He grew his equity $30 million in the year 2006, and it dropped $50 million in 2007 and 8. And it was because he continued to grow based on refinancing. Now, so you say you're in Tennessee. Tennessee, I would say, is a solid Jake
I
and
gotta know.
Gino
I
market,
gotta know
right?
what city. I gotta know what city.
Where in Tennessee?
Yeah, so that's the thing. Yeah, so it's a rising market. Well, here's the thing, the Tartos. So if you're in Nashville, Tennessee, my guess is you might be towards the top, right?
Yeah.
But if you're in, Memphis, who just got hot recently, or maybe Chattanooga or Knoxville or whatever, there's a lot of rising markets. If you believe, I'm going to take your word for it, the Tartuos, because I really want to speak to everybody, and everybody learn through us talking to you. At the end of the day, if you guys are in a rising market, or if the tea leaves are showing your market's continuing to rise, then keep the train moving. But if you're in a market that's starting to feel a little competitive, start to feel a little heavy towards the top, then keep it going, the Tartus, the
Tartizos.
Yeah, the Tartizos.
It
Thank
sounds
you.
Italian.
But I can't read that far. My eyes are going on me in my 43-year-old age, and I gotta borrow your
Here.
Yeah, no,
Okay,
okay.
great.
Yeah.
Okay,
I just started reading those recently. Yeah.
So we're going to run back to the Michael Blanc conference here in a few minutes. So if you have a question, now is the perfect time to ask
Chattanooga
it.
Choo Choo.
Okay, Chattanooga is doing very well.
Yeah, man.
Yeah, I was there.
Oh, you should keep moving with it then.
Yeah.
So
Keep the train running.
here's a few plugs that you guys need to be aware of, right? In a couple of hours, honestly, at let's say 5:15 Central, 6:15 Eastern. I keep doing the math.
4:15 Mountain.
4:15 Mountain, and 3:15 Eastern,
California.
and whatever. If
Western.
you're in Malaysia or whatever, you do the math on what time it's going to be there. But we're going to be doing in a couple of hours. I'm going to be doing a live session on Facebook, on BiggerPockets Facebook page. Facebook.
Okay.
You got to go to Facebook. Go to join BiggerPockets Facebook page if you've not done it already. I'm going to be doing a live session with Michael Blanc talking specifically, ask us anything about multifamily. We're going to have a live audience here at this conference with us. So be there for that. Also, on Monday, I'm going to be teaching a session, a live webinar that is for free, not $100, not run to the back of the room, no weekend to do, none of that, no
Nice.
$10,000 mentoring program for free. Free, zero. How many dollars? $0.
Okay.
And it's going to be on analyzing deals, because the biggest way to achieve success in real estate is to look at a lot of deals, right?
Yeah.
So Monday, go now to biggerpockets.com/webinars, biggerpockets.com/webinars, and take a moment and sign up for my webinar, because if you sign up for it now, you'll get a reminder. And then if you can't make it on Monday specifically at 8 p.m. Eastern when it's going to be Monday at 8 p.m., you will get an email with a recording of the webinar that you'll have a couple of days to watch. So, free webinar.
Wow.
How much is free these days?
Free?
It's just special education. And BiggerPockets produces this stuff because they love you guys, and because at the end of the day, we want to share what we know with you guys and help you guys advance your careers in real estate. So,
A couple things.
What?
Did you hear that BiggerPockets is doing their first national conference? Speaking of Tennessee.
In Tennessee?
Yeah.
In Nashville, Tennessee? Who's speaking there?
I hope you are.
I hope you are too.
Yeah,
I know
we
you
might
are.
be.
I think I actually know you are. I saw
So
you on
it's
the list.
Nashville, Tennessee.
Yeah.
It's not
should do this
cheap, but it's
again
going to be
there.
worth it. It's going to be one evening, Sunday evening, and then 2 packed
Yes, Omar, bring it
days,
on.
October
Bring
6th
it, Omar.
through 8.
Bring it.
And you can get tickets, I think, still, they're going to be sold out within a week, I
Absolutely.
predict.
Within a couple weeks.
They're only
I'm
selling
sure.
1,000 tickets.
Yes.
And it's at the, Gaylord?
And there's 1.5 million BiggerPockets members.
Is it 1.5 now?
1.5
Wow.
million. But they're like, put your pinky next to your mouth. 1.5 million BiggerPockets
Right.
users.
So check it out, guys.
And they're only selling 1,000 tickets. You
I don't
guys
know
need to
how. I wonder if they're going to expand it. I bet they're not.
I think that we're gonna have the next. We're gonna just expand it and have it at your house.
Really?
We're all gonna bring a couple thousand people
Speaking
to your front
of my
yard.
house, did I tell you what I did before
What'd
I got
you
into real
do?
estate?
What?
I invested in cardboard. Now listen to this. Cardboard. I bought cardboard. I don't mean to brag.
Yeah.
I don't mean to brag.
Yeah,
But I bought
tell me all
cardboard when
about
it was
cardboard.
6 cents a ton.
Uh-huh.
Okay. And it went up to 8 cents a ton. And I bought 4 tons of it. So Well, you do the math. But they gave me a special deal. They gave me half a penny off if I kept it at my house. So you can.
How large is 6 tons of cardboard?
Oh, it filled up more than my garage.
I'll bet.
Yeah.
Did it have to sit outside?
Yeah, it got wet.
Did you tarp it?
Yeah.
Did you lose it, right?
Yeah, well, I mean, I did end up losing it all. But
You lost all of it?
Yeah, I mean, but it was only 4 cents or 6 cents a ton. Come on.
Right.
Yeah.
There's a lot of things. I'll sell you 6 tons of a lot of different things if
Really?
you want to keep it. Yeah.
Okay,
yeah.
great.
But hey, all right,
All right,
Omar.
what else?
I'm in Cincinnati. I bought my first home last April FHA. I still have around $32,000 in cash and want to put it in real estate, but now I have to pay 25%, which reduces my range of property. Should I wait until I have more cash or buy something better, or get a cheap duplex or single family?
I don't understand the 25%. Is that taxes?
No, he's thinking about the money down for the
25
next
down.
deal.
Oh, of
About having
course.
only 25 down.
So in other words, he could buy a $128,000 property.
Yeah.
Okay.
I would be willing to suggest you buy the next property on 25% down. Build
Yeah.
yourself a track record,
Totally
Omar,
agree.
and then try and raise the next. So then you will have done 2 deals. Consider raising the next one from investors. So buy that deal, buy a good one. Document everything about it. Document the closing process.
Yeah.
Videotape the rental process on the property. Get the whole thing documented, and then you're ready to roll it out to investors. In my book, Raising Private Capital, I talk about building that track record and using that track record of success that you did with your own money to take it to your group. So
Right. Good. Sounds good.
Cool.
All right. What other questions do you have, folks? Omar, that's a $160,000 property.
They're helping
Did I
him
do
with
the
the
math
math.
wrong?
You did it. No, you
4
said
times
160.
32. I said 128.
Did you?
4
Yeah.
times 30 is 120.
Omar should talk to a mortgage broker, not you and me. 'Cause
It's
I'm not a mortgage
possible,
broker.
Dorlin, that you have maybe that's an 80% LTV or
Could
something.
be.
So
Omar, talk to a small community bank, not the mortgage
Yeah.
broker that sold you that FHA mortgage. Talk to go and find a small community bank. Buy the property
Absolutely
in an
agree.
Buy that property in an LLC. Okay. And then have the small community bank lend you the money.
yeah. So what's going on in Cincinnati these days, Omar? I grew up there, and I haven't heard about it very much lately. I know Columbus is booming, probably overpriced.
A lot of Ohio is doing well, I've heard.
Yeah.
I haven't heard as much about Cleveland. I don't have much interest there, but we'd like to do something in Cincinnati. Columbus, Toledo are all areas I've heard a lot about.
Yeah. Yeah.
And that. So, yeah.
We just invested in a storage unit in Dayton last week.
You did? How did it go? How's it going?
It's going great.
Good. What is the cap rates on self-storage?
So I visited a self-storage in a C area of Dallas today. 9%. Can you believe that?
Stop with your crazy
But
talk.
get this.
9%.
Of 240 units, 32. This is mom and pop owned. We're talking about fractured ownership in the self-storage arena. This mom and pop owner decided they didn't want to do auctions, like the storage wars. So they just left 32 units.
Full.
32 units.
Full of stuff.
Not paid. Good stuff in there, and they just didn't want to get around to doing the auction. So my friend just bought this.
Yeah.
He's doing the auction. He's going to clear those out and rent those. They're already 95%.
So you and your friend would want the stuff. Would say like, give me. It's okay. Leave the stuff in there.
Oh yeah.
Right. Why? Why?
Because
is there value in the stuff?
No. There's value in the income stream he's going to create when he rents those units.
So why wouldn't you go to the current owner and say, listen, I'll take it, but give me those, empty that mess out before I take ownership?
Because the opportunity to fix problems is the opportunity to build wealth.
The opportunity to fix problems is something that you can also ask for a discount on, and saying that,
Absolutely.
listen, I'll take it, just like that.
Yes.
Don't lift a finger.
Leave the problems in place.
Leave me the problem, give me a discount.
Right.
Write that down, man. That's
Yeah,
awesome.
I mean, think
Leave
about
the
it.
problem, give me a discount.
So he's got generally poor net operating income divided by a 9% cap rate. Now the new guy, my friend, is going to go in. He's going to clean the place up, beautify it, paint it, put in new lighting and security. He's going to increase the numerator of the value equation. Remember, value is net operating income divided by cap rate. He's going to increase the income by at least 25% quickly. He's going to shrink the cap rate by making a nicer place from 9 to, let's say, 7. And he's going to basically, when you include leverage in that equation, he's going to be able to double the value of the equity within 8 months.
That's incredible.
Yeah.
That's awesome.
Yeah, it's beautiful.
This man's slowly getting in my ear about the self-storage thing.
Yeah,
You never know.
sure.
We might be doing something in that space now because of him.
Thanks, Omar.
I got to get back to the conference. But remember, guys, in a couple of hours, watch on Facebook for me and Michael Blank talking live Q&A about multifamily, BiggerPockets.com/webinars if you want to sign up for my free webinar on Monday about evaluating deals.
And how are they going to find you and Michael today at 5:30
Go to
Eastern?
Facebook.
No, 6:15 Eastern.
Go on
Facebook Live.
Facebook.com. Just go to Facebook, Facebook.com/BiggerPockets.
Okay, great.
They'll see us there.
So Mamadou, I do not invest in foreign countries.
I do not either
At this time.
I'd like to visit foreign countries, but not invest in
absolutely.
them.
Okay,
Yeah.
thank you, Omar. Thanks, everybody. Okay, take
Thanks,
care.
guys. Thank you,
We
thank you,
appreciate
thank you. High five,
and
high five.
we will catch up with you next time here at BiggerPockets Live and livestream.com. Thank you so much, and have an awesome day.